It's Friday, January 31st. Current time is 20:25 GMT. I think I'm going to do a week ahead outlook today because next week is a key week and a pivotal week. It's one where the key events are towards the end of the week. We have the ECB meeting on Thursday, also the Bank of England meeting, but the ECB meeting is going to be main focus along with U.S. unemployment and non-farm payroll on Friday. You have PMI reports will come out before that, but really the key is going to be the end of the week. And we also watch emerging markets, risk on, risk off, and all that stuff, especially stocks after a week close to the month and an awful January. But as far as the foreign exchange market goes, it's going to be a week split into two. In the early part of the week, the market's going to be looking ahead to the ECB meeting. This suggests, as I mentioned earlier in my morning video, that the euro should have a limited upside ahead of it. Then we have the ECB and where they cut rates, as many seem to be now forecasting or at least hoping for, with the caveat that the ECB has a history of disappointing. The reason they're talking about a rate cut is because they did so, I think it was in October, when the inflation rate fell to the same level it fell, I think it was on Friday, it was 0.7% inflation. So the market will be looking to the ECB. It has a history of confounding and that suggests how the market ends the week, probably more important than how it starts. We have a double whammy first there and then the U.S. jobs report. So we'll see what happens. So if we're looking at the early part of the week, the euro should have a limited upside. If you look at this daily chart, because the only one has some longer term levels in it. As I mentioned in the morning video, there are two key levels as far as after 135. And we are closing below it. We have to get below 134.80. Then you'll have 133.97 as the first level. You have the 200 period moving average, which comes in around, it looks like around 133.68, and then 132.94. 132.94 probably being most important here. As you can see, there's not much below this 135 as the market melts down. So what would it take to negate this view on the upside? Have to go back above 135, probably 20. And then 135.50, and then only above 135.80 would really suggest that the break below 135 was a false one. So it's 135.20, 50, and 80 on the upside. And the downside, very little. Probably 134.50 might be an initial target and level, one of those pivotal ones, bias setting ones. But as I said, I pointed at the targets of 133.97 to 132.94, the latter being most important. So next week, it's going to be one where we have it's going to be divided into two. First one, anticipation, the ECB, we'll see what they do. And then you have the U.S. jobs report. So if it was a perfect storm, the ECB would cut rates and U.S. jobs would be strong and the dollar would soar. If the ECB confounds, has a history of doing and doesn't cut rates, then we'll see what happens then. So right now I'm just focusing on anticipation in the meeting, and that suggests the euro should have a limited upside until that key event. Have a good weekend, and we will see you on Monday.